Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. We are back with another episode of the Real Estate Investing Club. Today we have John Casmon from Casmon Capital Group with us. John is a multifamily syndicator, podcast host at Multifamily Insights, and an expert in marketing. So I am super excited to have him here. John, thanks for hopping on.
Hey, listen, thank you for having me on the show today. Really excited to talk to you and all your Real Estate Investing Club listeners. And it's going to be a great show.
All right. I love it. I told you before we got on here, we like to start with stories. We like to hear how people got started. So why don't we go back to the beginning of your story? How did you get started in real estate?
Yeah, I've always been interested in real estate and had no idea how to actually get into it. So back when I was in college, I kind of read some books. One was Rich Dad, Poor Dad, which I'm sure your listeners are familiar with.
Of course.
And I was like, that's it. This is the secret. And it's great, but how to actually implement that as a 20-year-old with no credit and no money wasn't very helpful, right? So fast forward a little bit, got into my corporate career and was working at GM in Detroit in 2007 and 2008. And that was right around the time when the market started to crash. And unfortunately, my company was at the forefront of that. So I was watching my senior leadership on cable news talking about the state of the economy, and we're sending our CEO to Washington to ask for help. And meanwhile, I'm told to keep my head down and just keep doing my job. So I'm like, this
the world's
sound
crashing
good
around you, and they're just like, it's okay. It's okay.
You know that meme with the dog, like with a cup of coffee and the fires going on around him? That's kind of how they wanted all of us to act, right? So I realized, obviously, that this was crazy and that, this level of anxiety couldn't be healthy. So I wanted to think about other ways to, kind of take care of myself. And what really happened was we had a day where we had a big round of layoffs. The guy who sat kind of kitty corner from me, he got let go from his job. And this guy had been there for 22 years. He was what we call a lifer. His plan was to retire from the company, get his gold watch and all that, right? His pension. And he was distraught. He left a message and it kind of hit me hard. And the big takeaway for me was empathy for him. But also, how do I prevent myself from being in this situation? I was pretty young in my career, and I went back to that book, Rich Dad Poor Dad, and just thought about real estate. So I set out to start investing in real estate. Again, I was in Detroit. So now 2008, 2009, 2010, market's still on, not on fire, but burning down, right? So still crashing. And everybody I knew who owned real estate was trying to fire sell it. So I'm like, I don't think now's the right time or this market is the right market, right? So I ended up moving to Chicago in 2011. And my wife and I, we got married and we bought our first property in Chicago, a 2-unit property that we lived in one unit, rented out the other, commonly known now as a house hack. And that was how we got started. And from there, we just started to build on our portfolio. But I really take it back to that time in corporate, because if it wasn't the level of anxiety I faced on a daily basis, I'm not sure I ever would have took that level of interest and converted it into action. And people always say, oh, you're so brave to do that. No, I'm not.
Yeah.
If you are in a position where you're in fear and your worst fears are right in front of you on a daily basis, it makes it much easier to take action. So for me, watching my leadership on the news, looking at the headlines in the newspapers and the magazines, watching, these talking heads, but these are my bosses, right? These aren't just random people on cable news. This is the woman who I just sat and had lunch with to explain my career path. And I'm trying to figure out if I'm even going to have a career. Right. And it wasn't just that, it was like the entire auto industry was basically getting blacklisted almost. And it was like, man, I got to figure out my life. And that's why real estate became kind of a saving grace for me.
Yep. No, and that that story resonates with me well, and I feel like I've heard that same structure story on this podcast so many times. Is when people's, they have their back against the wall and they really have no other choice and they have to make money, and that's when they see the potential and they jump into real estate. It doesn't have to be that way. People out there, you guys can get into real estate before that, but that motivation definitely, it is an impetus to achieve success in real estate for sure. And I'm never against corporate, but man, if you are in corporate, I was in corporate for a very long time. And if you guys are out there, you aren't really safe until you have full control of your financial future. And when you're in corporate, you really don't. You're at the whim of your bosses. I'm not saying leave corporate. Corporate is a great path for a lot of people, but you can always invest on the side. You can always get started in real estate. Um, so that's all to say. I like your story. You went through hard times, and we all do, but you got out the other side. And it all started with that Chicago house hack. That is a great way to start. A lot of people get down there. I got started in wholesales, house hacks. A lot of my friends got started in that. So once you did that first house hack, what was the next step after that?
Well, the house hack in my mind was kind of like cheating, right? So it felt great, but it was cheating, right? Because I needed a place to live. And even that deal, like we were renting a place when we first moved to Chicago, and we knew we wanted to house hack or buy this 2 to 4 unit property. But again, there was no sense of urgency. We were looking, I didn't like this one. I don't know, maybe that one. We'll see. Well, then these properties started flying off the shelf. And I remember what was we started looking in December. January was slow. Mid-February, we had a list of like 10 properties, and about 3 or 4 of them came off the list in about a weekend. So like, oh, well, that's interesting. All right, well, let's just add 3 or 4 more back so we have our list of 10. But we did that. The next week, 4 more came off. And it was like, oh, okay, I think the market's starting to heat up.
Things
We
are
may need to
flying.
be a bit more, direct here. So now we're starting to get, more prescriptive, and we're touring more properties, and we're getting ready to put in offers. And in short, my landlord, we decided we were going to just renew our, go month to month for a couple months, and he told us no. He said, nope, my wife's pregnant, and we want somebody who's going to be here for a year, so you can either sign a year lease or this is your notice that you have to move out. And I was like, oh, okay. And this is
Another
like three
moment of
months in
back
advance.
against the wall. Yep.
Yeah, this was like 3 months in advance. We didn't like wait 30. This is like, we gave him 90 days. Like, hey, man, can we just go month to month? He was like, no. So back against the wall. Well, guess what? That list of 10 properties is now 6. And we added 2 more, 4 more came off. And we just said, all right, hey, out of these 4, which one do you like best? We were like,
We're
that one.
pulling the trigger, damn it.
And we pulled the trigger, right? And that's what happened. So the next move for us was, okay, we did that, but we live in one unit. It's working great, but let's get a real rental. Let's see if we can really do this as a pure rental. So we bought a 3 unit building. We got it off market. Great opportunity where we built a relationship with a broker. And she actually had a client who was going to sell. And she called us and said, listen, I've got another client who's looking to sell. I think this property matches everything you're looking for. I've never done a double agent thing before, but take a look at this. I can get you in to see it. I'm going to list it Monday. But if you want to put an offer, I want to connect you two together so you guys can just talk through it and I can help with the paperwork. But I don't want to necessarily be like misrepresenting either of you. So I said, great. So saw it. It was absolutely perfect. It was exactly what we were looking for. I called him. He was very easygoing. And we kind of just banged out the numbers and a couple of emails back and forth. That Sunday night, the day before she was going to list it. And we got under contract. So that was a 3 unit property. The great thing about that was we saw it was a great value add opportunity where we could increase rents, and the rooms were really big. So we were really thinking as renters because we were renters essentially. So we knew what people were looking for. And I knew what people really wanted in an apartment and what made that apartment building, it was only a 3 unit, but what made that 3 unit different than some of the other 2 to 4 units in that area. So that made us really, really comfortable with that property. And now we're actually managing, residents at another building. I had to figure out maintenance. I had to figure out other things that were a little bit more challenging. And then we bought an 8 unit building. I actually refinanced that first one, bought an 8 unit building. So now we're starting to scale. And now I'm like, all right, this thing is working. We had
Got a
6 figures of
well-oiled
equity in that
machine.
first one. So now it's like, well, how do I scale this? Because if you go back to the beginning of my story, the whole point of me getting into real estate was to insulate myself from job loss, from corporate telling me, hey, man, we don't have your role anymore. Good luck out there in the open market.
Yep.
So while I was getting these properties and starting to scale this portfolio, we were still in the same boat because I wasn't making enough money to walk away from my W-2. I wasn't in a
Yeah. So
position
this
where
whole
if I
time you
lost my
were
job,
working, you were at
oh
GM.
yeah. I
Like
was
you
well,
were
no,
you
I left GM. I moved to Chicago and started working for an advertising agency.
okay.
So I spent 15 years in corporate America doing marketing and advertising for large brands like Nike, Coors Light, Mountain Dew. I
Yep.
was at GM for those 4 or 5 years. So I was still in the industry, but now again, and quite frankly, my work is even more volatile because
As an advertiser, yeah.
as an advertiser, if I lose a client, well, what happens to those people in those accounts? And I was one of the lead guys, so I was the group director. So my salary, you can't just take that kind of salary and put it anywhere or spread it out anywhere. So it's much easier to cut me than to cut 3 or 4 junior people to balance out that salary. So that was always something in the back of my mind. So I always had this pressure and anxiety of performing on the day job while also trying to figure out how do I build this portfolio that could insulate myself in case something did happen, right? So it was always a lot of pressure and anxiety while I was doing that. So real estate absolutely made it easier for me. And the one thing I tell people is the mistake I made was trying to do it all by myself.
Mm-hmm.
I
Yep.
thought I had to find the property, have all the money, do all the investments, manage the property, or hire the property management company, but I had to do it all.
Yeah.
And
That's
well,
been my mistake too. And it's just now I've been in real estate for a while, but just now I feel like I'm really starting to understand, like, stretch my wings and get the different roles out there and just letting other people take reins on certain positions. And it's a hard thing when you first get in. It's very natural to want to, or to kind of feel the need to be responsible for everything, the full stack of investing in a real estate, property. Um,
yeah, absolutely.
so, this whole time you were working at GM, or sorry, working in marketing.
Hmm.
So my question is, one of the keys to finding good deals, usually, not always, sometimes brokers bring you good deals, but usually it's finding an off-market deal. So were you using your marketing skills to find off-market deals, or were you just sourcing them through brokers?
That's a great question. Yes and no. So my strength is really more on the relationship side. So
Mm,
that's even in the marketing world. I was kind of the account lead, so I was the liaison between the agency and the client. So building strong relationships is one of the things that I'm fairly good at. So I would say when I found off market deals, it was always through relationships. It wasn't
mm.
through like cold calling or direct mail or
Digital
something like
marketing,
that.
anything like
It
that.
was usually relationships that I built. So, talking to be like again with that broker, right? So having that broker relationship, being very clear on what we're looking for. And she was able to say, you know what, I think I've got something that could, and this took like 2 months before she said that to me, right? She had been working with this other client, and about 2 months later, she's like, this guy's gonna list this, and I think this is exactly what you're looking for. The 8 unit, that was a deal where we had been working with a broker. We went through a bunch of listings together, and he kind of came back and said, I know this one isn't exactly where you want it to be, but out of everything you're describing, I think it's one of the strongest ones we've looked at. You should take another look at it. And I did, and it actually did check the boxes on a lot of our criteria. So we ended up moving forward with that. And then all the other large properties we've done, it's usually been through a relationship. We bought a 28-unit building where there was a property that was listed. I reached out to the broker because he wasn't one of the big brokers in the commercial space. And he told me that property was already under contract, but he would keep me in mind. Well, I made sure he kept me in mind. So I followed up with him about, every 45 to 60 days just to see, hey, do you have anything new, anything else going on? Wish him happy holidays, sent him a holiday card, all that kind of stuff, right? Well, when he did have a deal that was similar to the one that I initially inquired about, he reached out to me and he told me he reached out to about four other people. And he said, hey, I'm sending this to a short number of people. If you are interested, let me know in the next 5 days. Otherwise, I'm going to list this on the open market on MLS. I took a look, crunched the numbers, sent my sister to go look at the property since I lived in a different state at the time. And the numbers worked out good. We got the thing under contract in less than 48 hours. So I think those things helped me recognizing opportunities. But where marketing helped me was market research. That was something I was extremely strong in because, they tell you location is the number one rule of real estate. And in a lot of ways, it is. If you understand the market, you understand the dynamics of the market, where demand is, why this side of the street is better than that side of the street. All those little nuances are very important. So if you
Don't
can figure that
invest in
out,
shrinking cities. That's the key there. You don't need to be an expert in market analytic, understanding markets, but just don't invest in shrinking cities. That is,
well, here's the deal, right? So I'm going to push back on that a little bit because I think it always depends on your business plan, right? Because I know people who are killing it with almost any of those things they tell you not to do, right?
crushing it.
Somebody's out there killing it doing it, right? So I think it's very important as a general rule. There's a reason people tell you that, like look at population growth and all those things. We do the same thing. But I've also learned in watching other people that if you are going to break the rules, you better be really clear
Yeah.
on why those rules exist and what you're going to do differently where those rules don't apply to you. For instance, if you are going to invest in a shrinking city, you better not rely on population growth, which means you better not rely on rent growth,
Yep.
right? Because if you don't have more demand, how are you going to increase the rents over time, right? That's the whole reason we look at it. So maybe you're relying on government housing, right? Or Section 8 or something
Or
like
you
that.
just buy really well. You buy for, pennies on the dollar.
Exactly, right. So you got to have a different strategy if you're not going to go by the same rules. But to your point, those are the things that really helped me where I was able to tap into that marketing background.
Yep. So I took a peek at the clock. We are rounding out our time, but I do want to ask two questions before we move on. You're at $100 million invested or assets under management right now. How did you go about financing them? And do you use third party property management or have you guys vertically integrated?
We do use third-party property management. As far as financing our properties, we do what we call syndication. So
Mm-hmm.
essentially, we partner with everyday professionals like your listeners here, and we work with them to pool our dollars together to buy larger apartment buildings. And the reason it works is, as I talked about earlier, when I'm out there trying to find a property by myself, you're out there trying to find a property. Everybody's out there trying to do it by themselves. Where there's a ton of work and energy that goes into that, and there's only so much scale you can take advantage of. But if you pull those resources together, well, now we've got a couple of millions of dollars together, or maybe $5 or $10 million that we can go out and buy a much bigger property. And because we're buying a bigger property, we can put professional management in place.
Yep.
We have full-time staff that are overseeing the properties, and we can run it like a business. And that's my background, right? I'm used to overseeing businesses and overseeing big budgets. So when you're trying to run something where, you're only going to profit a couple $100 a month, well, it's hard to run it like a business if you have no sense of what expenses are going to be based on what pops up, right? If you need a plumber or an electrician or whatever else. So that scale makes it more predictable. And that's
And
how we help
safer.
everyday professionals to invest.
Yep. That was my biggest mistake up to this point in my career is thinking that smaller properties was a good way to get started. When I got into self-storage, I was looking at really, 50 to 100 unit self-storage facilities. And that's pretty small. I bought three of them and I quickly learned that there's actually safety in size. The bigger properties, they're not going to have the higher cap rates, but they're safer because you can withstand, the gross revenue can withstand problems that arise that are inevitably going to arise. But if your margins are a couple hundred a month, then one door that breaks, that's taking out all of your profit. So I like that you said that. I am going to move us on to the quick question round, but I appreciate everything you've shared so far. You ready for the round?
Let's go.
Let's do it. It starts with books. I'm a big bookie, so give me two recommendations, one for general life wisdom and one for real estate specific.
Man, Atomic Habits by James Clear is my go-to book. If you are looking to make changes in your life in any different phase, check it out. It's a phenomenal book, very well written, and one that I have about 4 or 5 copies, and I give them out often. So check it out, Atomic Habits by James Clear. For a real estate specific book, it's got to be the best ever apartment syndication book by Joe Fairless. Doesn't it's written specifically for apartment syndication, but it doesn't just apply there. You know, if you are invested in commercial apartment buildings or commercial real estate in general, I think it still applies, but there are a lot of principles that I think apply to all real estate investing. And sometimes if you can learn how to do something at the highest level from a corporate standpoint of professionalism, it can even apply to single family houses. So I think it's just a great book to help you understand how to play the game at a higher level.
Yep. Yep. The fundamentals of real estate don't really change across asset classes. The management does, but the fundamentals usually stay the same. And that moves us to the next question. This is for your younger self. So if you could go back to the John who, let's say he was at GM, just heard from his boss that, they're starting to let people go back to him, look him in the eye, give him one piece of advice moving forward.
Pull the trigger. I would tell him to pull the trigger. I was a guy who I didn't know anyone who was doing it. And when you don't know anyone who's doing it, you ask yourself, am I crazy for believing that I can do it?
Yep.
Right. And I didn't know any other real estate investors. I read a lot of books, but I didn't know Robert Kiyosaki, right? I mean, it's a dude off a book that I'd never seen, or he just wasn't real. None of this stuff was real. So you doubt yourself. We all have self-doubts. And I think that if I would have had more confidence in myself, um, I would have just, pulled the trigger a little bit faster. So,
yep. And confidence only comes from action. You're never going to feel confident when you're doing something you've never done before. So just get out there, get it done. Books are a great way because then you feel like you kind of know someone who's done it before, but really you just got to get that action out there. Find a mentor. Just take that, buy that first property. That should be your goal. That moves us on to the next question. This is habits. They form the foundation of our life. So if you could point to one thing you do every single day that you feel contributes the most to your overall health, well-being, and happiness, what would that be?
oh man, well, that I do every day. Um, Man, that's a tough one. I mean, so there's a couple things. One is going to be I do have like a mantra that I state to myself every day, which is I have the energy, creativity, and discipline to create abundance and prosperity in my life for me and my family.
Oof, I love that.
And the reason that is important is I used to, hear people say, you want to have, these things. I forgot what they call them, but you know the words.
Affirmations.
Affirmations, thank you.
There you go. There you go.
I never got affirmations. They didn't make sense to me, right? People say, "Oh, I'm a multi-millionaire and I'm in great shape." And it's like, no, you're not. What are you talking about?
It's
Stop
hard to
lying to
believe
yourself.
yourself when
You can't lie to
it's
yourself.
not true.
So what happened for me was I really had to dig deeper in affirmations. What I had to find is take the stuff you do believe in yourself and the things that allow you to be in your best mindset, which for me is a matter of energy. It's about creativity, which is really about problem solving. And it's also about discipline, which means do the shit, excuse my language, but do the stuff that you don't necessarily want to do because you just need to do it, right? And if you can do those things, if you can be disciplined, if you can be creative with problem solving, and if you can maintain energy, making sure you're getting proper sleep, you're eating the right things, you're keeping your energy level high, you can pretty much conquer anything. So I just tell myself those 3 things because if any day goes by and I feel like I just didn't do something or I didn't achieve something, it's usually because I slacked on one of those 3.
Yep. I love it. And that moves us on to the next question. Habits form the foundation of our life, but tools usually form the foundation of businesses. They are the backbone. So, what is one tool you could not live without?
I'm gonna cheat here, man, but I'm gonna go Calendly.
It's a
Calendly
good
is an
one.
amazing tool, and it has made scheduling so much easier. I have an assistant who has access to my calendar and all that stuff, but she takes that Calendly. I let people, kind of book times based on what it is they're looking for, and that really simplifies the way I'm able to control my day.
Yep. I love that. All right. The next question is mentors. We are not islands. We all stand on the shoulders of giants. We all learn from people around us. So who is one person who has really catapulted your career forward, and what was the way that they did that?
Lots of mentors to share for sure, especially from my time in corporate America, in real estate. Since one of my biggest mentors is a guy named Joe Fearless. Joe's a guy I met kind of, I wasn't really looking for a mentor, but we just kind of came across each other being in Cincinnati. And just watching him grow his business was very influential to me, because it just showed me that you could do it through here. Ultimately, my goal when I started was just, get enough money to cover my W-2 job. And when you see the real riches that could be created, not just that, but the lives you can impact, the people you can touch, and how many other people you can help along the way, that was really inspiring. So I would say Joe is one of those mentors.
Awesome. I love it. All right. That is down to the second to last question. And this is for the US. It's a big place, a lot of square miles out there to invest in. Sorry. So, what is one metro that you are most excited about putting your hard-earned dollars today?
Oh man, it's a great question. I really like Louisville, Kentucky. That was one of our latest deals in Louisville. The reason I like Louisville is it has a lot of great metrics as far as growth is concerned, but it's not so eye-popping that the competition is through the roof. And there's actually a little bit of resistance. There's some political things that make it just a little bit of a drawback. And I think those things are temporary. So I am excited about that market and the continued growth there. You can still get good cash flow as well as that appreciation upside. So we really like the Louisville, Kentucky market.
Nice. You are actually the first person to say that. So maybe it's a hidden gem. I love it.
Let's keep it that
way. Yeah, you shouldn't have said that one on this podcast.
I know.
That leads us to the very last question. You have given us a lot of good advice. I'm sure people out there want to reach out, say hi, and get connected. What is the best way for them to do that?
Two things. If you love podcasts, we have a show called Multifamily Insights. Check it out wherever you listen to podcasts. And then the other way is we do have a sample deal package on our website. And the sample deal package is for anybody who either wants to be an active investor and maybe start raising capital for deals, or if you are a passive investor and you want to wrap your head around what should you be looking for. And I say passive, really just a newer investor, and you want to wrap your head around what you should be looking for in a deal. So that deal package covers information on the markets, information on the sponsors, information on the deal structure, return projections, all that kind of stuff. So if you want to wrap your head around what you need to communicate or what you need to look for, you can check out that deal package at casmoncapital.com/sample deal.
All right, perfect. That is casmoncapital.com. I will put that URL in the show notes. So if y'all want to reach out to John and see that deal package, it is really good to kind of see somebody else's underwriting, get exposed to that so you kind of understand what people are doing, what professionals are doing. So if you want to get that, click the little more in the description. It'll pull down the full description. And in there, you can find John's link. So John, that wraps it up. I appreciate it. Thank you very much for hopping on the show.
Gabe, thank you for having me.
All right. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI Systems and Vendors Guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.